Welcome to True Finance, where your financial future begins with clarity and confidence. Welcome to True Finance's in-depth tutorial on reading detailed stock quotes. Today, we're going to explore the intricacies of stock market data, equipping you with the knowledge to interpret these figures effectively and make informed investment decisions. Every stock quote begins with a stock symbol or ticker. This unique identifier is essential in ensuring you're looking at the right stock. Familiarize yourself with these symbols as they are the first step in identifying and tracking a company's stock. Alongside the symbol, the company's full name is usually displayed, providing clarity on the exact entity you're researching. The last price is the most recent trading price of the stock. It's a real-time snapshot of what the market currently values the stock at. But remember, this figure is constantly changing during trading hours. This value is critical for investors to understand the immediate market valuation of a company. These figures represent the stock's performance since the last market close. The change is shown in dollar terms, while the percent change provides a relative measure of the stock's movement. These are key indicators of the stock's daily momentum and can offer quick insights into market sentiment around a specific stock. The opening price is where the stock began trading when the market opened for the day. It provides a baseline for the day's trading activity. Analyzing how the opening price compares to the last price can offer insights into the stock's performance throughout the day and can indicate general market trends or reactions to news and events. Bid and ask prices represent the demand and supply dynamics of the stock. The bid price is the highest price a buyer is willing to pay, while the ask is the lowest price a seller is willing to accept. The bid-ask spread, or the difference between these two prices, can give investors a sense of the stock's liquidity and market activity. A narrow spread often indicates a healthy, active market for the stock, while a wider spread might suggest less trading activity or greater uncertainty about the stock's value. These figures showcase the stock's highest and lowest trading prices over the past year, offering a broad view of its historical performance. Understanding where the current price sits within this range can provide context about its potential ceiling and floor and help investors gauge its volatility and trading patterns. The day's range shows the highest and lowest prices at which the stock has traded during the current trading session. This range gives a clear picture of the stock's volatility within a single day and can help investors identify potential entry and exit points for trading. Volume is the total number of shares of the stock traded during the current trading session. High trading volume often suggests strong investor interest and can be associated with significant price movements. It's an important indicator of the stock's momentum and can signal investor confidence or concern. This represents the stock's average trading volume over a longer period, such as 30 or 90 days. Comparing current trading volume to the average can help investors understand whether a stock is experiencing unusual interest or activity, which might be driven by recent news, earnings reports, or market developments. If you like our video so far, please be sure to hit like and subscribe. Market capitalization reflects the total market value of a company's outstanding shares. It's a key metric for categorizing companies into large cap, mid cap, or small cap segments. Larger companies typically offer more stability but potentially slower growth, while smaller companies may offer higher growth potential but with more risk. This figure represents the total number of shares currently owned by all shareholders. Shares outstanding include those held by institutional investors and company insiders. Understanding the number of shares outstanding is essential as it affects metrics like EPS and can influence a stock's liquidity. The P/E ratio is a crucial valuation tool, comparing a company's share price to its earnings per share, EPS. It provides insight into how the market values the company relative to its earnings. A high P/E ratio can indicate expectations of future growth or possibly that the stock is overvalued, while a low P/E might suggest undervaluation or underlying challenges. For those focused on income, the dividend yield is key. It shows the percentage return a company pays out to shareholders in dividends relative to its stock price. A A higher yield may be attractive, but warrants further investigation to ensure the dividends are supported by strong company fundamentals and are sustainable. EPS measures a company's profitability on a per-share basis. It's calculated by dividing the company's profit by the number of outstanding shares. A higher EPS indicates greater profitability and is often a sign of a company's financial health. The PS ratio compares a company's stock price to its revenue. It can be a useful metric, particularly for evaluating companies that are not yet profitable. A lower PS ratio might suggest a stock is undervalued relative to its sales, while a higher PS ratio might indicate overvaluation. This ratio compares the market value of a company's stock to its book value. It helps investors understand how much they are paying for a company's assets relative to their valuation on the balance sheet. A lower PB ratio can indicate a potentially undervalued stock, or it might reflect fundamental issues with the company. The debt-to-equity ratio offers insight into a company's financial leverage. It compares the company's total liabilities to its shareholder equity. A high ratio suggests that a company might be aggressively financing growth with debt, which could be risky if not managed well. The operating margin measures a company's operating efficiency. It's calculated by dividing operating income by net sales. A higher operating margin indicates a company is managing its costs effectively and generating more profit from its operations. It's important to interpret stock quote data within a broader context, including market conditions, industry trends, and overall economic indicators. High volatility in a stock might present opportunities for quick gains, but also carries higher risk. Similarly, a wide bid-ask spread can signal lower liquidity, impacting your ability to execute trades swiftly. Align your stock choices with your personal investment goals. Growth investors might lean towards stocks with high PE ratios, betting on future earnings growth. Dividend investors might prioritize stocks with high dividend yields. Every metric contributes to a larger investment strategy and should be considered in conjunction with other financial goals and risk tolerance. Evaluating risk is an integral part of stock investing. High-volume stocks might have more price volatility, presenting both greater potential returns and risks. Consider diversifying your portfolio across different sectors and market caps to mitigate risk. The stock market is dynamic, so staying informed about market trends and global economic news is crucial. Regularly review and adjust your investment strategies in response to market movements and new information. Remember, a detailed stock quote provides a wealth of information, but is only one part of a comprehensive investment decision-making process. Mastering the art of reading and interpreting stock quotes is essential for any investor looking to navigate the stock market successfully. This comprehensive guide serves as a foundation for understanding the complexities of market data and making informed investment decisions.
As we close today's journey through the landscape of financial wisdom, we extend our heartfelt thanks to you, our dedicated viewers, for joining us. Please like and subscribe so that we may continue to bring you the best financial education.